Tracking your sales and key performance indicators, or KPIs, is crucial if you want to save time and grow your business. I'm Hector Garcia, certified public accountant, and I've partnered with QuickBooks to share tips on how to scale your growing business. Before we get started, make sure to like this video and subscribe to the QuickBooks channel for more videos just like this. If you want to learn more about effectively tracking your business performance, visit the link below for a more detailed article. For a fast-growing business, speed is of the essence, and having accurate, actionable information about your business operations will help you speed up your decision-making and outpace your competition. When tracking sales and purchases, there's plenty of financial and non-financial data that your business can measure. As a business owner, it's likely that you start tracking standard accounting information, like who each customer is, when and what you sold them, and how much they paid. But there's also interesting and potentially creative non-financial information you can start tracking to help you run customized and summarized reports from vast amounts of data. You can then turn these reports into simple and, most importantly, actionable decision-making tools for your business. These data points can include the specific location you're delivering to, the salesperson who spoke to the customer, the marketing source that brought in the lead, or the foreman or supervisor on that job. Note that these data points all vary by industry and can even vary based on your specific management style. One of my favorite things to track is the marketing activity that initially brought in the customer. Pay-per-click search marketing campaigns, podcast advertisements, social media posts, and other campaigns can all bring leads into your business. You can start tracking the performance of your marketing strategy by simply asking your customers, where did they hear about your business? But if you don't have a tool to help you do this, it can be difficult to know where to invest your marketing resources in the future. For example, let's say you decide that you want to strategically invest 10% of all your sales back into marketing efforts. You might have some difficulty determining the most effective use of those resources if you have not been tracking those leads and other relevant data. By being able to see all your proposals, pipelines, and sales broken down by marketing source, you'll be able to have some insight into which of your marketing efforts are ultimately helping you grow your client base. This helps you make data-backed decisions in a timely manner. In addition to utilizing fully customized and personalized reports based on custom fields, there are also several essential KPIs you'll want to track. Two important KPIs to mention are the current ratio and the quick ratio. The current ratio divides the current assets by the current liabilities. The quick ratio only considers highly liquid assets or cash equivalents as part of the current assets in that calculation. These are principal cash flow related KPIs, and tracking them on a monthly basis helps you monitor your business's ability to meet its financial obligations. Generally, you're going to want to see that current ratio and quick ratio starting at about 2-to-1 or above, which means you'll have double the liquid assets to meet your current obligations, such as paying vendors or upcoming bills. In QuickBooks Online Advanced, you can create custom drop-down fields that can be added to each transaction. This function easily creates custom reports so you can monitor financial and non-financial data in real time and make the best data-backed decisions for your business. For more information on custom reporting and KPIs, check out the links in the description below. If you enjoyed this video, hit that like button and make sure to subscribe to the QuickBooks channel, and thanks for watching.